Again, everybody, welcome today to track order flow using the volume footprint charts. Again, my name is Steve Vettel, one of the managing partners at FXCSTrader and our sister company, Benchmark Wealth Advisors. I am primarily, since I've been in the industry for the last 15 years, I've wear many different hats, primarily as a trader, mostly of the futures markets the last 10 years, raised a lot of capital for a number of large RIAs. And quite frankly, a year ago, got absolutely sick of making money on for other large RIA firms. Decided to form my own RIA. So on the side, I do a lot of trading and coaching and mentoring. That was the primary business for a number of months over the last 3 years. As far as more part-time work, do a lot of trading on the side, but the new investment advisory business is actually going to be taking center stage for us. So I'm going to continue to do webinars, continue to be a preferred partner with especially NinjaTrader. I'm actually now a preferred partner in their ecosystem. So thanks to those guys, Josh and Paul. Danielle been very helpful in getting me to come aboard and so forth. Look forward to a fruitful partnership. So I had a number of slides prepared, and as many of you that have been through some of my webinars in the past, I usually like to go through really just important macro issues in trading. And I do get comments occasionally, and I do hear you guys. So if you have comments, I do read them. I do sort of put them into play. I do respond to them. But I continually have students come to me and ask me all kinds of micro questions, and they don't understand the macro concepts of trading. So as you know, and rightfully so, on some of the comments like, hey Steve, how come you just talk about macro events or talk about macro views of trading as far as auction market theory and then at the detail down to the fine print? Why don't you talk about a lot of stuff in the middle? And quite frankly, most of traders, I think a lot of them understand the importance of technical analysis, so I have a tendency to really skip past that. But they very rarely understand the macro perspective of trading, and that is how to truly understand the auctioning process of the market from a 25,000 foot level. And what they don't understand is at the most micro level, what I like to call the fine-tune level, or the fine print, is where to actually execute. Okay, so in the past, I have primarily worked with the Market Delta Footprint software. Very good company along with NinjaTrader. Just recently, being the last 6 months, I have actually implemented a new tool in addition to that. So essentially, I have 2 trading platforms now running side by side. So I have the NinjaTrader 8 with the Jigsaw plugin, which I'm going to show the screen of. And then I also run Market Delta as well. So for the first time in almost 7 years of trading, I have a new charting platform that I'm running simultaneously with Market Delta. So I now have 8 screens. So it takes up a lot of real estate and it puts a lot of pressure on my desk here. But the important thing is I like the Jigsaw tool a lot. I still have stuff to learn. This webinar is not really about how specifically to use Jigsaw. I'll have a couple of links posted towards the end of the webinar. You guys can certainly go on to that. But before we get started, let me just go through some. NT8's already been released, by the way, Phil. Let me just go to the website real quick. I know we had some questions about that. We're making some changes to the site, but I think it's important to just go through. If you guys want to know who I am, what I do, looks like that's sharing okay now. So you can get out and look at the bio at the bottom. If you go to the bottom of the page, you can see any of the links to Twitter. I have a pretty big following on Twitter. Keep in mind, I don't put a lot of chatty stuff on Twitter. It's only really important stuff related to either order, big time breaking news, anything related to order flow charting, or investment management. Also, if you wish, you can go to our YouTube page, which I highly suggest. I've put, this is the LinkedIn page where you can see the profile on me and so forth. But if you go to the YouTube channel, this is where all my videos are. Again, you can just find this by scrolling to the bottom of my home page. I have a lot of views on here, but these concepts cannot be grasped, in my opinion, in a 1-hour webinar. I tell a lot of my students that you should just be absolutely sick of listening to my voice in the gazillions of hours of webinars YouTube channel. Do keep in mind, as far as the disclaimer, guys, is that futures trading really does have a pretty big loss in it if you don't know what you're doing. Okay, they can be substantial, so you really should carefully consider whether or not trading is suitable for you in light of your financial condition. Don't be trading with money that you're going to be using to pay the mortgage next month. Is really the bottom line. Or food for your children. And I say this a lot, and I know a lot of people really try to glaze over this, but I've seen a lot of people and a lot of students blow out futures accounts just by really cowboying and gunslinging in their trading. And they'll come to me and they'll buy my course, and they'll go onto the education page, and here's the course. I know somebody was asking a question about that in email. This is the course. It's really a soup to nuts on how to trade futures. Okay, you can go through exactly and poke around that at your leisure. But I think it's important to understand that, and this really is the case, every single professional trader that's a good friend of mine, whether it be an Anthony Claire's, actually a good friend of mine in Orange County, these guys have all spent ridiculous amounts of time, and well over 10,000 hours in both cases, learning how to trade. And I think it's critical that if you're going to find any mentor to help you cut the learning curve down, and we'd certainly like to be that mentor for you guys as well if you're interested, but please be a sponge and have an actual map, have a business plan. We have, as part of our course, we have an entire business plan. It's almost 30 pages long on how to trade. It is involved. And I have, if you're interested, let me just slide this over. This is the first time I've ever offered anything like this, because I'm really finding many people just don't have a blueprint for what to do. So if you guys want, at the end of the webinar, my email address will be up there. Send me an email if you want. We can send you this PDF. It's a complete trading rules PDF. It details the path to consistent profitability from a macro perspective. It goes through everything from my pre-market routine to my post-market routine. And what it'll do is going into detail, and obviously I'm giving away some secrets, and there's some stuff in there you may not understand because it's specific to the types of charts and the types of custom indicators that we use here. But it's a really good sort of quick 11-page blueprint. There is much more complex stuff to putting together a trading plan, in my opinion, but it'll help give you sort of a head start in that. And I've deviated a little bit from the theme of this webinar today because all the questions I ever get just surround things like, hey Steve, what platform should I use? All that. When I think it's important to understand the platforms to use, everybody has their own preferred platform. I know Ninja is very large globally as far as a futures trading platform, for different types of markets, whether you're trading the CME or you're trading Eurex in Europe or NYMEX, whatever particular instrument on those indices you're trading with those exchanges. It's important, but at the biggest, most macro, or the largest picture that is really understanding both the auctioning process and order flow. So here's a little overview of our webinar today. We're going to go through very quickly. Again, if you guys want the slides, a lot of times I'll blaze through these subjects pretty fast. I can email the PDF out as well. If you want both PDFs, just send me an email. Also, if you could please give me some feedback in the email, what things you liked about the webinar so that I can. All right. So number 2, market profile, footprint, and chart examples. I'll show a few of those from today. It was a pretty wild day. Let's give you guys a little feel for that. I've shown a lot of examples of Market Delta's footprint in the past. So other than some pictures I have in the slides here we're going to go through, I'm going to focus mostly on Jigsaw and the Ninja today. So really the goal while you're observing all these tools is determine obviously what's going on, but really whether trading activity is drying up, being facilitated, or increasing in pace at one extreme or another. So the third I found is always helpful is why order flow charts play a critical role. And a lot of times you guys will hear me say consistent profitability. I think it's important. So we'll go through that as well. And again, got these in slide form. If you guys weren't hearing me earlier, I have both these PDFs converted to slide form. Just send me an email. All right. So with that ado, let's continue on. Market profile. So really the key here is that in the mid-1980s, Peter Stettlemyer developed the original market profile, and it introduced traders to the visual aspects of time in the marketplace. So he worked with programmers at the CBOT, Chicago Board of Trade, essentially to put the price-time relationship into a bell curve. And again, you guys have the opportunity through my YouTube channel to see all these videos, and I talk ad nauseum about market profile, and so do some of my colleagues as well. So there's actually a fair amount on there if you search market profile or footprint in YouTube. But the problem is very, very few people understood how critical time is as an ingredient in the market. So market profile was widely used among the floor trading community in the late 1980s, and it spread widely to the retail and institutional trading community in the 90s. And really was heavily picked up as far as understanding the auctioning process in the market by retail traders starting really in 2000. I learned all these concepts in 2006 through 2008. I was very fortunate at the time starting up a previous fund with a colleague. And I was introduced to this concept by a couple of institutional traders at Goldman Sachs in New York. And they basically suggested that I learn this first if I'm going to be trading the futures markets or currencies globally in understanding what's going on from a macro perspective. And they really were instrumental in helping me out. And I was also fortunate enough to be mentored by a couple of Peter Stettlemyer's students, one of them being Tim Dalton. So I read a couple of Jim Dalton's books, which are still fairly relevant today. Mind Over Markets and Profile. If you guys want to pick up copies of those, you buy them on Amazon. They're probably floating around in ebook form as well on the internet. Two really good books, long and sort of drawn out. I usually suggest reading just the first maybe 5 or 6 chapters. But really, as far as learning market profile, there's a number of different ways to do it. You can go through our course as well. We teach it soup to nuts, but it's always good to look at the teachings of that from a couple of different mentors' perspectives. So really the key thing with market profile is the value area. It's the primary component derived. It's essentially from a time perspective where all of particular price is trading. So really the objective with value is to establish where trading is taking place. And one of the best things about the value area is it's put into a bell-shaped curve. And really the key thing with market profile, and I'm not going to get into charts and all that right now, we're sort of running out of time, but it's a really important tool in being able to see. And I got to tell you, if you were to do, I always suggest to students to do what I like to call a look back or a replay of the previous 5 days or last 2 weeks. I mean, these zones of both point of controls and center points of the profile have really nailed some of these reversals in this market. And it's been just instrumental, in addition to all the other gazillions of technical indicators out there that one can put on a chart from the very big areas of aggregate time and volume that takes place as far as profiling. And a lot of the both high and low volume nodes, volume perspective, not time, absolutely nailed these moves. I mean, look at the low today as a great example of how we just hit. I mean, obviously, it was a big low as of last fall. We bounced around this area and then ripped a lot of the shorts a new one on the way back up, right? But if you look at all the market profile charts today, they were signaling a potential another bounce as well. So as soon as we ripped off today's low, you know, we had almost what a 46 point rip off of the bottom, right? That you know, you knew not to really sort of step in front of that, because looking at the order flow today, every time we tick down a couple of ticks, we jump 6. So when I go to show the jigsaw tool, it's going to really show you know how we were moving on that. But again, you guys can read this slide. But as far as the overview with the profile, you really want to look to see 4 things out of the market, okay? And you want to look to see if there's any responsive selling, okay? You want to look to see if the market is, or the price is trading within a value area, or you want to look to see if we are balancing outside of a value area in any given time. So, but with the profile itself, and this the next slide. This is the 4th area. This is either responsive buying, or responsive selling, or initiative selling. So initiative, really the key phrase there being is that when you sort of have initiative, meaning that wow, they're taking the initiative outside of a given range or a given value area range, and they're still continuing to push past that. That many times will lead to a trend day, obviously, like today, and that is one of the most important things I look at from a macro perspective. Is an example where I will never step in front of the current train. Current train today was up for that particular trend. Now, the market obviously has been in a lot of trend days over the last 6 months, much more so than the previous 6. And that's an important thing to recognize from a very broad standpoint, and what they like to refer to as context of the market. So what is the market trying to do? Are we balancing in a given area? Or are we looking to be initiative and take that away from balance, potentially be a trend day? That, in my opinion, is the single first most important thing that any trader needs to recognize before they look at any other indicator, okay? So what's a market profile look like? In its very simplistic form, see we have a value area. This is the bell-shaped curve, and then obviously both of it up and you know, above and below that value area. And this is many cases where a lot of the initiative type of movement can take place. So we have different scenarios of where we open up, bounce around inside of value, like scenario 5, open within. I will suggest to students and traders is very simply looking to see what has the market done over the last 5 days or 2 weeks or whatever period you want to measure, but at minimum, the last 5 days. Have we spent the last 3 days bouncing inside of value area highs and lows? Have we spent the last few days trending out of a particular big value area that we spent a lot of time in? And the amount of time that we have spent in those areas is as critical as to potentially forecasting what can happen. I'll give you an example. Let's say we spent the average of 4 days, I should say the last 4 days, average of 4 days, or 4 trading sessions in a particular range. It was a big range, okay? There is, just statistically, we're looking at probabilities of all kinds of back testing. We introduced before day 5 has materialized as some sort of range bound. We know there's a much higher chance or higher probability of breaking out. So we'd be less willing to hit against a rise, right, in a potential breakout or initiative buying above a given area, then we would looking to short that. We'd be looking to see a pullback after we broke out or slingshot to potentially get long. We really haven't seen too many 3 or 4 day periods of stuck in a particular range. So maybe this particular example hasn't been as relevant to the trading we've done recently. But it is critical to understand that you're constantly thinking about probabilities. So the the value area is really just a price range of a given day. So if we open inside of yesterday's value area, maybe it was, XY at the top. And I'll kind of show you on the chart. I don't have the Market Delta stuff opened up on this trading system that I'm broadcasting from. It's on my other machine system, so I can't show you that. But if you want examples of how market profile works ad nauseum, just watch some of my other webinars. It's on the YouTube channel or on the Trader Kingdom website, which is redundant from my channel. You'll see a lot of that. So I'm not going to get too much into that today, John. So these are 5 scenarios. There's other kinds of scenarios, but these are the most important. These are the ones you must recognize from a macro perspective first. Teach you context, right? So getting a little more drilling down into order flow, okay? I track order flow 2 ways. I track it using Market Delta's footprint chart, and I track it using the Jigsaw plugin for NinjaTrader, okay? But at its Jigsaw chart that I use, like a dome, they, along with the footprint, combine price with total volume and bid-ask volume. It's essentially an aggregate. It's a different way of viewing aggregate volume. So I'll often be asked, especially by some of my friends out here in wine country, down here in Southern California. I live in the Temecula area of northern San Diego. I'm often asked, well, do you teach how to trade Forex? And I'm not a fan of Forex. I'm not necessarily against it. It's just there's, from a volume and a time-based profiling perspective, you really need, if you want to be or focus on what I feel is the most important, you have to find a particular instrument or contract or a security that trades somewhere as a centralized exchange with an aggregate volume. So I prefer, just personally, that students learn trading ES first. So if you're overseas and you can't necessarily, be awake during the U.S. market times, then you're obviously at a disadvantage, in my opinion. And everybody's got their opinions of that, so this is obviously mine. And that is really from years of seeing students really messing around with oil and all kinds of crazy currency pairs in Forex, or at the very minimum, take a look at the ES, maybe learn to trade with the ES. You're welcome to use almost every concept that we teach and I'll talk about today to trade the DAX as well on your X and to trade oil. Problem is those movements of those other contracts are much greater. Well, maybe not recently, it's been wild, but much greater historically. They have a much higher tendency to be a widowmaker of your futures account. So that's why we usually have every client start off trading the ES. And quite frankly, there's been plenty of movement, guys, on the ES. So a lot of I actually disagree with that. There's been plenty of movement. So now that I'm off my tangent, the chart types, obviously I think that goes without saying, execute with greater precision. You can see what's going on at the very core of the chart. Ultimately, gaining of confidence is absolutely key as far as understanding order flow. It filters out the noise. What I mean by noise is that when you look inside a price bar or you look at the aggregate volume on a Jigsaw window, you're not looking at a time and sales screen. You are not watching, one single contract rip through time and sales because you're looking at it in a filtered, as filtered as you want, by the way, um, and you're looking at it in the aggregate. So what executes in terms of volume of actual trades that get placed on a particular contract shows you where the aggressive trade is versus just looking at a depth window, whether it be for the ES or any other contract. And, especially with the ES, I mean, the depth of market, um, the typical types of stuff you see in a dome like the Ninja Dome, they really, I do not have a lot of students that like paying a lot of attention to it once they've been through our course because they just want to see what executes. All the spoofing that goes on in this market by algorithms and other types of computer systems really makes that depth um, crazy. I mean, it's been absolutely loony today if you were to look at all that. It just makes your head want to explode. So I always suggest focusing more on the order flow that is of actual execution in the aggregate than watching all that other noise that's going on in the market. So the filtering the noise is important. Okay? So order flow, I really think this is the missing link for many traders. I have seen, albeit I don't suggest this to everybody, I've seen students just skip through a lot of stuff in whatever particular trading course they're taking, and just focus. And they understand a little bit how to read price action, obviously, but they've become masters of reading order flow, and they still became consistent traders. Now, I'm not suggesting that anybody do that. Okay, it's just something I've seen from a few superstars that I've mentored recently that has been surprising. I've never done that. I really think you have to put your time into the complete understanding of technical analysis, but at its very micro level, what I like to call a fine tuner of where to trade, understanding order flow and the changes to movements in its very simplistic form. And when I talk about simplistic, it really is, I don't pay a lot of attention to when I'm looking at a particular dome or looking at the jigsaw dome. I don't pay a lot of attention to a lot of the ancillary stuff going on. I consider it noise. Yes, it's important. Yes, you're using it as tools in your quiver to shoot and execute a trade. But at the very most micro level, all you want to look at is whether the market's ticking. It's that simple. If you just focus on that, forget about everything else. You want to be somewhat cognizant, depending on your ability to multitask, right? You want to be cognizant of everything that's going on in the charts, but at your most micro level, you just want to look to see, is the market ticking up? Does it jump 4 ticks up in the bid and offer jump values, and then it just drops 6 points, right? So today is an example. After we had the big sell-off into the noon hour, and then the ripping rally that took place, I should say the noon hour into last night, and then the ripping rally that took place off of the midnight move into the rally today, all you had to see on any dome for that matter that was showing you an aggregate of volume executing is that we would drop maybe 4 or 5 ticks, we'd immediately bounce 8. We'd drop 3 or 4 ticks, and we'd rip 10. So, telling you, geez, maybe I should probably be buying pullbacks more than. And, as far as order flow, there's different kinds of tools that'll show order flow, and then everybody has their opinions. And keep in mind, I'm probably biased, obviously, to Ninja and Market Delta, but I would imagine there's all kinds of plugins that just show some of the stuff, not necessarily the footprint, but show an aggregated order flow of where the executions take place in an e-signal or in some of the other platforms out there, like a multi-charts or a trade stations. So I can't comment on any of that, but what I can comment is the importance of understanding it. Now, the question was just asked, well, isn't that mostly for scalping? No, it's, and I would encourage AJ, if you haven't watched some of my other webinars, maybe that'll answer some. Jump to this next chart. Big areas of order flow and drying up that are quite clear. So, for instance, I'm actually going to show you this. This is a little more relevant. Okay, this is a chart of ES snapped a while ago, but I think this is a phenomenal example of where order flow in its aggregate can be demonstrated. So in this particular case, we had really ripped a whole bunch up. I mean, kind of like we had happened the other day, and coming into an area where this is what's called the Market Delta Footprint Chart. These are areas of and this is a footprint, so this is everything that's executing in the aggregate at that given time in the ES on the CME markets exchange. So when we came up to, which was like 1750, I should say 1700 and few ticks above it, we were running into an evaporation in orders. No more lifting of the offers going into this spot. So we had two order imbalances of over 10 to 1. Which is something I will look for at the top of a particular area. And this was obviously a century mark in ES, so that by its very nature has a lot of support and resistance importance to it. But just, I mean, literally the lift that came into this area was nuts. It must have been like 25 cars or 25 points that just ripped up, and we came to this area. So showing that we're really drying up on the order flow. And then every time we come back up to a given area, we have less volume going off. So no order flow essentially going off at the top, two sell side imbalances showing up in a row. Then at this particular point of the second imbalance, is that automatically signaling to us that there's going to be a big reversal like there was? No. So, you have to use your best judgment that, you really have to look at the probabilities at this point. And if you were to put on a trade, and lucky enough, I only got a real partial fill in a small trade I put on here, but it paid quite nicely, and I held the trade. So the footprint and a lot of the order flow can be utilized for not only where to execute a long or short trade, but how to manage the trade, especially if you have any runners you're trying to get off much lower. Every time it rotates back up or down, it's giving you clues as to its movement. So we had a huge sell-off on the footprint, bounced around for a while, came back up towards the important area of sell-off, and look what happened. Same thing. This was over a 10 to 1 sell side imbalance. And I'm not going to get into the details, you guys, of explaining how to use the software. I mean, it literally could take another hour easily. But I just want to give you enough to be dangerous and encourage you to watch more webinars and stuff. We'll take our course. Well, looking at this particular lift, over a 10 to 1. For those really knowing how to see this, came back up to closer to 1700. Yes, if you were picky, you would not have even got an execution to re-short unless you were looking at this and you saw that big sell side imbalance hit. You're thinking, geez, I may have another shot to get another ride on this. Sure enough, another 10 points came from it, depending upon whether you were executed in NinjaTrader or not. So this can be a very powerful tool that you use correctly. Keep in mind, guys, I will answer all these questions I see coming through. So have some patience. I just want to show you. But here's another example. This was more of a heads up. See, we came up to these areas. We had 1, 2, 3. And I'm not going to use a drawing tool because it's kind of hard to erase it. But we had 3 sell side imbalances show up at the top of each of these bars. And the sell side imbalances were giving us a clue that maybe we are topping out. And every time we came back up to this 1682.50 range, sort of went up and ran all the rest of the stops, and then look at the size of the order that went off. Boom, that was it. Like almost like a crescendo move. And then we had called an order imbalance show up at the top of the next one. Went up and tested that. Oftentimes, if you have any kind of number that's not a zero by something else, it can be a heads up to an auction at that particular point. Oftentimes the market will go up sort of magnet, if you will, in this area to try and complete what I was viewing at this point to be an auction. We came up and sold off again all the way down 16.8. The other example of this is a reversal pattern. So even though in this particular move you had a number of sell sides hit on the way up after a huge rip, okay, and major volume down in this yellow bracket, kind of reversal. So even though you were like, man, I'm kind of on a high alert that we may be topping out here, the exact same thing happened on the first pullback. So you can see that some of these numbers were quite large once we blew past 1696, which at the time was a pretty big composite low volume node on the longer term charts on the composite profiles we show. And we came back to it. Look at all the buy side imbalances that hit 3 in a row before we ripped again. So this is a good example where you can utilize the footprint to actually get on a trend. In this particular case, buying the pullback, which I often refer to as slingshot. Pull back, gain enough shorts that aren't reading this chart right, and go rip them again. Kind of like we saw the vast majority of today. This almost looks like today with different numbers and different dates, right, and different cumulative values. So the short squeeze continued all day. We saw tons of buy-side imbalances down here to the bottom. So I'm going to jump off and I'm going to show the, this is a possible exhaustion point. Let me switch over to the monitor though and show the Alrighty, looks like you guys can see this. All right, this is NinjaTrader with the Jigsaw plugin. And essentially, we're looking at this in the aggregate, just like we did on some of the previous slides. This is a live sort of snapshot. Market's closed here for a little bit while CME updates her computers and so forth, so trading will turn back on here. But this is a snapshot of what took place today in a 30-minute chart. Okay, and I will look at 30-minute charts a lot because that's how the time price opportunities from a volume or from a TPO perspective, from a market profile chart, the candles are put into a time price opportunity. So just looking at from perspective of candle chart, got just a number of different indicators on here. You guys can actually see some of the trades I executed today on. But looking at the Jigsaw plugin tool right here, I'll just go through this real quickly. Now, this is a plugin. It's $399 for a lifetime license. No, I don't work for Jigsaw. No, I'm not getting compensated from Market Delta. I just use these tools. This is a company that is run by a gentleman named Peter Davies. They are based in Singapore. These guys are actually really good. They saw, kind of like Market Delta saw as a whole, in not really having a good tool to provide that plugs into Ninja to provide a different view or the aggregate of order flow. This is called a depth and sales chart. And the center column, keep in mind down here, so the center column is where the execution is taking place on both sides of the market. The aggregate for both the offers and bid sides are calculated here, broken down by each side of the dome. And this is just for each, both the bid and the offer. and then the aggregate is on the left-hand side, you can see that that is colored in orange. That's really like looking at a volume-based profile. So you've seen a lot of my past seminars. You've seen a lot of volume-based profiles. But wanted to spend some time towards the end of this webinar talking a little about this tool, and then I'll answer some questions. One thing I will not be accomplishing today is a complete and thorough explanation of how to use this tool. I just want to give you guys a quick overview of it, because quite frankly, it takes some time. There are a number of really good videos out there on how to both implement, set up, and use this tool. There are a whole number of customizations as far as switching columns around that you can utilize. I'll be honest with you, there's a couple of custom ones I've seen that I'm going to try and get the code for from Peter that I like better than this layout, because I think that you keep in mind the market's closed, so both in the blue and red column, you're not seeing any of the depth of the market right now. There's no live feeding coming in for that. But live feeds, you'll be seeing the depth of the market. So unlike many domes out there, not only can you see aggregate volume in both the sides of the market, buy and sell, you can see it as a total. So if you were to take these two numbers in this particular case, I don't know if you can see this, but this is a 15,267 contracts plus 13,618 total traded at this category. And keep in mind, this is volume just as of today. You can clear this dome out at any time, and you let it continue to total up. But I choose to just look at the volume just for the RTH session, which is what this is showing. This is the total. So you can look to see where are the pockets where not a lot traded, right? Almost like an intraday composite low volume node, right? Or you can look to see where a lot of volume executed. 1350 is an example. And if you go up and down, you can see how that changed. Now the value area, look how big it is today. It's the orange area. 1975 all the way down to 1886. I haven't double checked this against my other market profile charts. Sometimes that can be off if you have different chunks of data coming in. So if you want to do a reload or a historical reload, a backfill, you can double check that. But you can actually set up where the value areas are. This is obviously a big value area, but hey, so is the case recently when we have had huge drops and huge rips on the movement in this market. But if you're looking at the center column only, just really ignoring all these other numbers, you really just want to focus in on what's going on right in here. Okay, what's executing at that time, up or down? How many ticks are we ripping up versus how many are we pulling back? Opposite being said, both below. And we did not see, most of this day at least, we did not see a whole bunch of dropbacks. We did see a heck of a lot of rips. And since I refreshed some of this data, there's some gaps in the information to see what was executing at that moment without having all the noise of the previous day's aggregate showing up in these totals. So what is suggested when someone first wants to use this is the depth and sales tool. There's a couple other tools that Jigsaw has, but I'm just talking about this one right now. The focus on just looking to see what the market's doing and what the volume is, and then obviously paying much less attention to what was today a lot of spoofing going off on the depth charts, both buy sell. I mean, there was a ton of all kinds of erratic numbers. Somebody throwing in 10,000 contracts and everybody freaking out, and then things started moving up a bunch, and then they pulled it out. It's ridiculous. So I mean, that's why I always want to focus on what executes and less on the noise of what's showing up in the depth of the market. So the question I got the other day, which I thought was a good one, was, well, do professionals that know how to look at all these charts, are they looking at all of these numbers at the same time? No, they're not. I mean, they're just focusing on what's going on at that time, at that moment. to determine whether or not you want to get in a trade or take some scales off a trade, or set their stop at a different point, or maybe hunt for another place to set some sort of limit order to go long or short. They're glancing at these areas, but they're focusing mostly on what's going on at the most micro level. And I think a lot of people get caught up in wanting to understand how all these other numbers and doing the math and the relationships and um, almost turning into your own little mini algo in your head, when I think it's unnecessary. You really just need to see where the power is. They have a little power chart you can add on to this thing too, but where to see where the movement in the market is. Okay. So you can use these tools, by the way, at any time of the day. So I prefer to trade mostly during the RTH session, what I call regular trading hours. The ETH, or extended trading hour session, encompasses what, 23 hours a day that most of the CME markets futures contracts trade, or the DAX on Eurex. So yes, you can utilize these tools at any time during the day. Just to understand at other times that are overnight, it's going to be less volume. So you're going to have probably less to go on. Now I got to tell you guys, so far this year, the Asian Open, it's been fabulous. So one of the few times in the last few years that I've been literally front and center every night. Don't know that I'll be doing it tonight, but absolutely a Sunday night through like Wednesday night, there's been a monster amount of activity the last 2 weeks. Not every minute, but there's been some, as obviously China's selling off, and the currencies being repegged and the offshore version of it, and it really has spilled over into big freezes in their markets after they've gone down a bunch, which has paid off fantastic for volatility on the ES and the DAX as far as the broad-based in so it's been great to trade. So apologize to you guys because we've run a little bit later than I wanted to. I've kind of jumped around a little bit on topics. So I think what I'm going to do is I'm going to have, and maybe I'll just shoot this myself with Camtasia and put it up on YouTube, but I want to shoot a more in-depth video on what I'm looking for in more detail on this Jigsaw tool. So I'll do that. I don't know what I'm going to do, probably next month, and you guys can see more detail on that. But I'm going to continue my learning curve on this tool and hopefully be a master of this tool in the next few months, and be able to present some of that to you guys. So let me just do this. Let me take a quick gander through some of the questions here. Running low on time. Answer some of the questions along the way. Gosh, it's been great. So did I clear up your questions, Al, about the volume profile, market profile, and order flow? Which is which? What you're looking at right now is NinjaTrader 8 with the Jigsaw plugin. The answer, oh, you came in late, and no worries. I mean, you can watch the replay out. It's going to be up in about an hour or so. What would you consider the true open posting? Yes. So that very simply is the opening New York time. The RTH, essentially the pit session hours. There's really no more pit. It's really the pit session hours, which is 9:30 Eastern time. That's when all the volume hits. Albeit, the volume has been hitting a lot recently, though, and overnight. Hope that continues. It's a lot easier for us folks out on the West Coast here, to jump in front of the trading desk between 6 and 8 o'clock at night than it is for us to get up at 4 a.m. So, all right, volume one. Okay, so I think I answered those questions. All right, switch over to that. Yeah, I already answered that. Okay, cool. Any other questions before we call it off, folks? You can always send me an email. Let me just put this last screen up here and switch over to that. Questions? Yeah, there we go. So 7 key elements to consistent profitability. This is broken out in much greater detail in the PDFs that I have. I want to send you essentially commitment. Obviously, look at the commitment professional athletes put out. It's tremendous. You got to think positive. Don't fight the market. Today is a great example. If you have a short bias, today was not your day. Don't fight it. Ride it. Do focus on being right. Don't focus on your P&L. Risk, obviously. Don't trade too many contracts if you need to use the money for other stuff, or if you have a gunslinger mentality, had a winning month, quarter, year, whatever. Don't automatically just completely explode trading size long on a particular trade like today. Blow out of your account. You've had a great track record. All components of risk have the edge. Hopefully I've given you some tools today to give you a little more of an edge. At least enough of a appetite to go out and find more out about what I've talked about. But also the key thing is absorption. Find the right mentor and be a sponge. I may not be the right mentor for you guys, and that's fine. But there's a lot of really good mentors out there. You're in Southern California? Um, where do you live in relation to San Diego, Jack? If you want, just send me an email. You can call me either way. All right, guys, that's it.